Welcome to the Daily Business and Finance Show. Big Oil's methane fund rejection, AI's massive transformation, and Germany's cannabis legalization halt, a mixed bag of corporate and global news. Plus, cities strong by ideas for the year ahead, Apple's production pause in India, Zuckerberg's $190 million stock sale. Also on the docket, Kinder Morgan's dividend raise forecast and Carvana's shaking off JP Morgan bear call. Lastly, we delve into Google's postponed AI event. Stay tuned after this short ad break to unpack these headlines further. Chevron and ExxonMobil have chosen not to participate in a fund designed to decrease methane emissions in developing nations. This fund was initiated at the COP28 climate summit. 6 other oil corporations, along with several countries, have each contributed $25 million to this fund. Despite Exxon's endorsement of the initiative's objective, both it and Chevron did not commit to reducing their own methane emissions.
Wedbush Bank forecasts a surge in expenditure within the technology sector come 2024, with a specific emphasis on artificial intelligence and cloud computing. The bank holds the view that the transformative capabilities of AI are currently undervalued, predicting an investment of approximately $1 trillion over the forthcoming 10 years. Despite high market valuations and interest rates, solid growth is anticipated for technology stocks, spearheaded by Nvidia and Microsoft. Furthermore, Wedbush Bank expects an increase ranging from 20 to 25% in spending driven by cloud and AI technologies as their applications continue to broaden across both enterprise and consumer sectors.
Legislation to legalize marijuana in Germany has experienced a delay due to apprehensions from the Social Democratic Party. However, the timeline for legalization is still expected to proceed as planned, provided the bill progresses by the conclusion of next month. This situation could potentially influence a range of cannabis stocks in both Canada and the United States.
Citi Research's most recent analysis brings to light 11 highly rated stocks for the forthcoming year. These selections are made considering liquidity, their performance in Citi's quantitative model, and distinctive stock calls. On average, these stocks possess a market capitalization of $155 billion and anticipate a total return of 23%. The SPDR S&P 500 ETF Trust also demonstrates potential as per its 200-day simple moving average.
Foxconn, a key provider for Apple, has put a temporary stop to iPhone production in India because of intense rain. The choice to resume operations close to Chennai will be decided on Tuesday. In the midst of COVID-19 interruptions and trade tensions between the U.S. and China, Foxconn is progressively investing more in India. Recent projects include a venture worth $600 million in Karnataka and a factory valued at $500 million in Telangana.
The chief executive officer of Meta Platforms, Mark Zuckerberg, capitalized on a surge in stock prices last month. He sold shares amounting to approximately $190 million. This transaction represents his first sale in a span of 2 years. Regardless of this, Meta's stock has experienced a substantial increase exceeding 150% within this year alone, surpassing the performance of other technology powerhouses such as Microsoft and Apple.
Kinder Morgan projects an increase in net earnings for the fiscal year 2024 to $1.21 per share, exceeding Wall Street's prediction of $1.10. The firm, specializing in energy infrastructure, also intends to raise its yearly dividend for the 7th year in a row, achieving $1.15 per share in 2024. Anticipated growth spans all business sectors, with natural gas pipelines and energy transition ventures standing out. This is despite a rise in capital expenditure due to regulatory obligations.
JP Morgan has improved the rating of online car dealer Carvana to neutral from underweight. This change is due to a more comprehensive understanding by investors of the company's challenges. Despite a difficult macroeconomic climate and the current phase of the used car industry, JP Morgan believes that Carvana has the ability to limit potential risks. However, high interest rates and concerns about valuation prevent JP Morgan from becoming optimistic about Carvana's prospects. On Monday, in pre-market trading, shares of the company increased by 5.51%.
Google's new artificial intelligence product, Gemini, has experienced a delay in its launch due to problems with non-English queries. The original plan was to hold in-person events across the United States, but Google is now considering a virtual preview instead. This development occurs as Google strives to keep up with OpenAI's ChatGPT. And that's a wrap on the Daily Business and Finance Show. Stay informed, stay inspired, and remember the world of business waits for no one. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.